Thank you so much, everybody, for joining us today. This is Unlimit's second roundtable, and it is about fintech beyond borders, thriving, not surviving. It is our second roundtable as an organization, and this one is incredible because it's all in-house experts that we have here to discuss what is happening in the state of cross-border payments and giving their insights at local regions and with global insights. Cross-border payments have been surging in demand and undergoing radical transformation as we see further growth to the already high levels of human demand, trade, mobility, digitization, and transportation. There's huge importance placed on cross-border capabilities as they serve in trade and investment, which is crucial to our global economy, emphasized by B2B transactions accounting for the largest share of cross-border, which was estimated to have reached over 150 trillion US dollars by 2022, according to Ernst & Young. Additionally, we're seeing new markets rising and maturing, new businesses thriving, technological advancements, which are causing and calling for rapid improvements with cross-border capabilities. But we see that regulations, data protection, authorities working towards improved interoperability are also improving those channels, but we do still see numerous obstacles. Complexities around the chain of involved parties, varying regulations, infrastructure limitations, time constraints, and beyond have built obstacles and sticky points among international payment corridors. The Bank for International Settlements disclosed that cross-border transactions can cost up to 10 times more than a domestic payment and absorb 10% of the value of a transfer. So whilst technology is aiding towards overcoming and removing some of those barriers, the rate of growing demand for cross-border payment facilitation is an all-time high, and influence among social, political, environmental, and education factors are imperative to support more fluidity in international payment corridors. So in today's roundtable, Unlimit's very own experts have come together to discuss the state of cross-border movement, compiled with their on-the-ground knowledge from their respective regions and awareness of global developments. As leaders in the fintech space with over a decade of experience as an organization and countless years as individuals, each of our guests here have knowledge and contribution to the state of cross-border payments, influencing factors, and future trajectories that is going to make a very exciting conversation today. So with that, I welcome each of you as our guests who've generally gifted us your time today for this poignant discussion, and I welcome you officially to our second roundtable. I would like to kick us off with a small introduction about each of you. So Jovi, would you like to kick us off?
Certainly. Thank you, Sim, and everyone. Hi and welcome. So I'm Jovi. I'm currently the MD for Banking as a Service at Unlimited EU. Over 2 decades in the financial services and also the fintech sector. My focus has been on developing, launching, and scaling banking as a service, and also enhancing payment ecosystems across Europe. Pleasure to be here and looking forward to the conversation. Thank you.
Thank you so much. And Trevor, would you like to introduce yourself?
Sure. Good afternoon, everybody and fellow colleagues. My name is Trevor. I'm based out of Cape Town, South Africa. I've spent the last 22, 23 odd years doing business across Africa. I am a chartered accountant by training, but I've worked in various sectors and regions in finance, in tech, in retail. A lot of that has been in various ways throughout the African continent. So that's been quite a good learning curve. I've seen the growth and the change of the African continent in the last 20 years. And I think that's quite important because, you know, a lot of the other countries are fairly mature. So just to witness something firsthand, to get that experience is quite interesting. I've been with Unlimit for coming up to 4 years, and I launched Africa and India. There was no presence prior to me joining. So I've got them off the ground. We've now got 4 offices, 2.5 licenses, and about 70 employees in those regions, and we are growing all the time.
Amazing. Thank you.
Trevor, what's the half license you got?
We've got a provisional RBI. We've got a provisional license from India, waiting for the final approval. So you could say 2,8 if you like, or 2,9 licenses, because we're 95% of the way there.
Got it. Okay, I'm going to use that as well.
Thank you. Ignacio, would you like to take the stage?
Absolutely. Hi, everyone. Ignacio Morales. I'm head of country in Mexico. Over 2 decades in the payments, remittances, and fintech arena. Over a year in Unlimit. It's an exciting time to be in the fintech space in Mexico and Latin America. Currently working to expand Unlimit footprint in Mexico, but also towards getting a financial license here in Mexico to make us able to issue debit, credit, banking as service. So that's an exciting part in the country. So I'm looking forward also to hearing from you.
Great. Thank you so much. And William?
Hi, welcome all. Good evening, good morning, good afternoon. My name is William. I'm now the head of APAC. I'm a little bit ashamed to say, after Jovi, Trevor, Ignatius, I only have 1 decade of fintech experience. So I started as a tech guy. I was a trained engineer from Canada, and I joined Cisco, worked there for 10 years, and I started fintech from PayPal in 2014. So looking at cross-border is always in my blood. If you're looking at the global trade, APAC, when I say APAC, including China, including Vietnam, including Southeast Asia, that's exactly like where the momentum is going on. I'm looking forward for these discussions to learn more from all the leaders and what we can share about this exciting region. Thank you.
Thank you so much. And last but definitely not least, Lucio.
Absolutely. Well, I'm the head of Brazil. I have 26 years in the banking, payment, and fintechs industry. Previous to this, 10 years in the IT area as developing softwares and managing teams for financing. I'm supporting global companies and local companies to set up operation in Brazil and Latin America.
Perfect. Thank you so much. So in efforts to not waste time, let's jump straight into it. So the first part that we would like to discuss is the state of cross-border payments as a whole at the moment in your respective regions. So looking at what is there at the moment and what has actually shaped it in terms of its environment. Would anyone like to put themselves forward to begin?
I'm happy to start if
Amazing.
Nobody objects. So I think cross-border and African, I might take a little bit longer than my time allocated, so please do interject when you need to. Cross-border and Africa is it's quite a complex thing to talk about because there's so many aspects and angles to it. Is it inbound? Is it outbound? Is it intra-Africa? Is it ultra-Africa? So I think in the first point is that when a lot of people, let's just first talk about intra-Africa. When a lot of people talk about Africa and they say, I want to do business in Africa. There's a foreign merchant based in Brazil that want to come to Africa. I want Africa. The first thing I say is, well, okay, the 54 countries in Africa, which one do you want? And they say, well, I want all of this. So there's often a lack of understanding about what it means to say, let's do business in Africa. Because people say, I'm the Africa head, I'm the Africa expert. Yes, but I know more about Nigeria and Kenya than I might do about Mali or Burkina Faso, for example. Yes, they're in Africa, but they would never be on our radar for many reasons. So that's the first point. You've got to actually get your head around. It's better to say, I want to talk about cross-border in Nigeria or Kenya, maybe regionalized to say sub-Saharan Africa. So once you get your head over that, because a lot of people think that Africa is like Europe, and it's not. How business is done in Nigeria is completely different to how business is done in Benin, the one neighboring country, and Cameroon, the other neighboring country. So once you've got your head around that, then you say, well, which way are the flows actually going? Because cross-border transactions specifically, and you know, from a Mexican perspective, you can appreciate this, inbound remittances are a big cross-border trade, but it's huge for Africa, particularly because the currency is a mess. There's lots of, and Nigerians in particular in the diaspora, even Egypt. Egypt, I think, is receiving $30 or $40 billion of inbound remittances. Nigeria is receiving $20 to $30 billion a year. India is receiving $100 billion a year of inbound remittances. Now, the Nigerian currency is rapidly depreciating. It's down about 100% in nearly 6 months. So that demand for the inbound remittances is only going to surge. Contrast that to Mexico, when the Mexican peso has actually appreciated, because obviously a lot of trade is moving away from China into Mexico, so it's driving demand. So that might slow things down on that side. But in African context, inbound remittances as a cross-border function is very big. If you now look at, so that's, let's call it inbound or import. Let's look at outbound or export. From a And cross-border, what sector are we talking about? Now, if you think about Africa, Africa is a natural resource-rich continent. So there's a lot of outbound cross-border trade in terms of, let's assume, minerals, mining, energy. But that's not what we're talking about, because we can't, set up a payment gateway for a mining company like Glencore. You're not going to go and spend £10.99 on a gold bar. It's millions and millions of dollars. So in our context, cross-border, export, or outbound is then talking about things like, well, goods that you're going to export or services that you could export out of the continent. And that, unfortunately, is very small for a lot of reasons. Number one, it's if you're dealing with getting goods out of the country, the cost of sending something from Nigeria to the States is expensive. Number two, even intra-Africa cross-border trade. If you want to send something from one side of the continent to the other side of the continent, you might as well send it from China to the Canary Islands, for example. Border posts, logistics, fees, pricing, and you mentioned earlier on about the high cost of fees and the high cost of doing business. So there's a lot to talk about with regards to Africa and cross-border transactions. So you almost have to pick the area that you want to focus on and then narrow down on that. So realistically, from our perspective, from the e-commerce perspective, generally it's inbound, where someone in Nigeria buys something on Amazon.com and the goods get sent into the country. So from a cross-border perspective, that's the reality of how the trade looks today from this point of view and from a fintech or payments point of view. Now, the other issues, like if you want to go the other way and you're selling goods in the country, but you want to send money out. So I go and I import something from America, I get the goods, I now have to pay the money out the country. In a country like Nigeria, you've got the situation where if the logistics worked and the goods came in, you've now got a currency issue where you need to pay to get the money out the country. What do I mean by currency issue? What I mean is that there are no exchange controls in Nigeria. You're free to pay for your goods that you bought in euros or dollars or pounds. The problem is there's no physical dollars or pounds cash in the country with which to make payment. So that has led to the creation of a parallel market. So you've got the official bank rate, let's call it 500 to 1, and the parallel rate where the liquidity actually sits. So suddenly the cost of buying the goods is actually double. A few months ago, the Nigerian government accepted that actually they can't keep pegging the rate. They've got to move it to where demand and supply meets, and they let the rate float. And since then, it's gone. Now it crossed over 1,000 to 1 about 2 or 3 days ago. So that's now the challenge to deal with. So then, if you're a business in Nigeria, you're paying for goods out the country, you want to pay for it as soon as possible because it's going to become more expensive in Naira if it's got a foreign currency quote. So those are challenges that you need to get around. So those are just some of the high level areas. Each you can actually spend an hour talking about each problem, each sector, each category. But these are just some of the challenges that are specific to Africa. So that's why I just wanted to put that out there. Maybe other participants can find similarities or differences in their regions. But just from an Africa perspective, so complex and complicated that I could just touch upon the surface. You could find areas that might be of interest, which we could talk about a bit more.
If I could ask a question very quickly, Trevor, what's the role and what role or what impact does trust play from a cross-border perspective? Again, obviously having a Nigerian background and know my mother, for example, you could have the most secure website, everything could be secure, but as soon as you have to get her to make payments online, it's like, whoa, do I trust this company? Do I trust this merchant? Yeah. Do I trust this gateway? So how important does trust play in terms of cross-border challenges?
It's a very critical element of the cross-border transaction. But if you buy something from Amazon.com, there's no trust issue. The goods are going to come in. If someone sends you money inbound, the funds are going to arrive. You trust that side of the cross-border transaction. Where there's a trust issue is if you are in Nigeria and you go to a website to buy something, either a local Nigerian e-commerce website, or indeed you want to buy something from a European website that's got a nice pair of shoes, for example. The trust aspect stems from the fact that Nigeria is still a cash-heavy country because people don't trust the banking system. They don't trust anything. If they now want to make an online payment, what's going to happen is they order the shoes online, be it locally or for import. they're going to pay, let's assume $100 today. Right after the transaction has taken place, they don't have $100, they don't have the products. They're now trusting the process that the goods are going to actually ultimately arrive. Or if they don't arrive, they can get a refund. And who's the payment provider? That's one side of it. The other side of it is, I put my bank details into the system. Are my bank details going to get hacked? Am I going to get fleeced? So there's a lot of that trust issue which still exists today. So often it's part of the problem of the hindrance of why local e-commerce, as we know, isn't really prevalent in Nigeria. You know, if you see a website in Europe, there's 1,000 micro e-commerce websites that you could trust all of them, and they work and their tools and checks and balances. Nigeria, it's not going to happen unless they're big household names. Then it's going to be okay. Then you could trust the process. So you're talking about a handful of merchants you would actually trust. If you don't trust them, if you haven't heard of them, even with all the best intentions in the world, you're not going to trust it. And your mother is right in that respect. It's a huge problem to doing business. It's a big hindrance. Over time, it will slowly improve. But as I say, the Nigerians, you know, the concept of a bird in the hand is worth two in the bush. And they got the cash and they hold on to that cash. They are going to not let that go unless they've got an exchange in real time. So sometimes now what happens is a lot of these e-commerce companies say, okay, pay me on delivery, and pay cash on delivery or pay card on delivery. So that solves that problem, but then it creates a new problem whereby the person arrives at your house that you want to go tap your credit card. There's no mobile phone connectivity, so you can't tap the credit card. Or the person arrives at your house with a pair of lovely Nike shoes that you wanted. You have a look at the Nike shoes, you say, you know what, I've changed my mind, I don't want these. Now somebody has to carry the cost of that company, of that return. Is it the logistics company? Is it the e-commerce company? And these costs now become a big factor in doing business, which is almost a barrier to wanting to actually grow the business, which almost self-perpetuates that the e-commerce company can't actually get off the ground for those kind of reasons. So that's part of the problem. And again, I could talk about this for ages, but this is just a high-level overview of the trust problem.
Awesome. Thank you.
Sure.
Thank you so much. William, would you like to maybe share some insight into APAC?
No, absolutely. So I totally agree with Trevor on his watch. If you're looking at cross-border commerce, like if you're looking at Asia Pacific, three things I want to share. So a lot of global companies, I work for Cisco, I work for PayPal, I work with Fiserv, right? They look at APAC sometimes is one region, but for us that is in the region, for us that's doing business, we know that APAC is very complicated, even for the language or even for the dialects. So even for Mandarin for China and Singapore and Taiwan are very different. So, and we also know that like the APAC countries are very famous for doing cross-border, even from like 10 years ago. So they had been the merchants from China, now the merchants from Vietnam, now the digital gaming merchants from Korea, Taiwan, they're trying to capture the world. So what is important for us, Unlimit, or in the payment industry are two things. How we enable those merchants when they grow and when they go into other countries, exactly like Trevor just mentioned. So if I have merchants from China, if they want to go into the US, it is a little bit simple, so they can use PayPal as a very credit card concentrated market. Like they can get VM, they can go into any acquirers. But let's say if I want to go into Nigeria, let's say TikTok, let's say Shein, what they can do, I think that is our strength. Also for Lucio, right now I am working with one merchant from China. They're trying to grow the Brazilian market, and I know that the regulation just changed recently. So I think that those are the things that we can help the merchants in. The other thing is like I'm talking about selling out as export from the regions. The other things is like if you're looking in a lot of merchants globally are also trying to attack the APAC market. We all know that US, Europe, like the macroeconomics are not that optimistic. Let me put it this way. So in order for them to grow, like they want to go into the Asia Pacific. As Trevor mentioned, India. If you look at India, 4 years ago they used cash most of the time. But also because of the pandemic, a lot of things has been changed, including digital payments. So as I mentioned, Hong Kong, Singapore, Australia, they may be very heavy on VM, on the credit card. But if you want to go into India, if you want to go into Taiwan, if you want to go to China, there are a lot of alternative payment methods, APMs, that you need to take about. And that's all exactly like what we are trying to do. So in APAC, I'm seeing two ways. One thing is like how we help the merchants in APAC reaching out to the uprising hyper growth countries, Brazil, Mexico, Africa, Latam, right? And the other thing is like how we can bring the rest of the world to APAC with this highly concentrated population. So our roles is unlimited in this. As I mentioned, in two ways. One thing is how we enable them. The other thing is like how we educate them with our knowledge. In Brazil, in Africa, in India, also as Jovi mentioned, right? So nowadays, like getting money in, what I call the pay in, is only one side of the stories. We also need to keep the things in the ecosystems. So banking as a service issuing is also a very important factors for the merchants to manage the money, how they get the money out or the payout, how they get more people in on side. So those are my two cents of thoughts.
Yeah, very interesting. Thank you so much. I know you mentioned Lucia. So Lucia, would you like to go next?
Okay. Well, taking part of what William said, so Brazil and Latin America in general, but in Brazil, the global platform like AliExpress, like Shein and other ones, they are entering into the Latin America spacing, and Brazil represents half of the economy in the region. When a company wants to enter into Latin America, they look for a provider that can cover the whole region. But each one of the countries has each own characteristics similar that you have in Africa and APAC. And also in Brazil, we have something slightly different in comparison with other regions where you can pay installments with credit card. It's very strange. And the challenge sometimes is you receive the merchant receives the funds in installments. So imagine that you are selling a good or a service that with a high average ticket, and someone can pay 10 times, 12 times. But at the same time, the merchant will receive the funds in 10 times or 12 times. But if you want to receive in advance, the banks or the funds charge an additional interest per month. And by the end of the day, the total cost can be much higher in terms of supporting the financing than providing the good or the service. Also, Brazil has some agreements with Mercosul, with the South Cone, in terms of exchanging opportunities for selling with lower taxation or zero taxation. And also, we have some agreements with Mexico and some other agreements with China. And the Chinese companies, they're entering to Brazil, bringing lots of products in different areas. But the big challenge is much more in terms of logistics and taxation, because we have some limitation. It's a competition between the local players and the global ones, mainly the Chinese ones, that when they are entering the local market, they are bringing products with a very low cost. And the government sometimes review the taxation and increase the taxation. At the same time, the central bank is a very active bank. So the central bank is regulating the market but promoting the competition. What is good? Since 10 years ago, they created the payment institution regulation that accommodate fintechs and new players and open the market. And now we are discussing cryptos, we're discussing betting, and that's what is good. So the central bank, they don't want to avoid the competition, they don't want to avoid this type of people, but they want to accommodate in a fair way how the players will work on this space. And in the last 2 years, central bank launched a well-success payment app that's called Pix, a real-time fund transfer, where you can transfer from account to account in 24 hours by 7. It's with a very low cost. So we have different payment types locally, like Boleto and other ones, but it's something very interesting because you can move funds from one side to the other side anytime. And you can use your mobile number, you can use your tax ID, you can use your email. That's very interesting. and now the central bank is discussing providing recurring payment via Pix, providing installments via Pix. And the funny thing is that the Brazilians, when goes to Argentina, or goes to Chile, or goes to Florida in the US, I would like to pay using my Pix. And some payment companies, they are offering Pix abroad, where you can have a domestic transaction and a real-time fund transfer, but at the same time, you have behind the scenes a wire transfer that you settle the funds to the international market. So I see that the competition is growing, the market is developing, global customers suffer with the interest for the cost of Brazil and the taxation. But at the same time, it seems that we will see the competition growing, and what is good, it's a good space for new players, for new companies entering into the region and in Brazil.
Yeah, thank you so much for sharing. That does sound very versatile. Ignacio, how does that compare to the state in Mexico?
Sure. Well, I think that we are a little bit behind, but the speed of change that is going on here, it's really overwhelming. And let me just try to fit in the different categories for explain what is going on in Mexico and part of Central America, but I'm going to focus on Mexico. First, we have the geopolitical situation that we're living here. First, we are neighbors of the largest economy in the world, and that economy is changing the relationship with different countries. So this year, Mexico has become the largest trading partner of the US. We displaced China on that trade. If I can share this, I think it will be helpful for you to understand this. I think I cannot share the screen, but I don't here it is. So imagine this: for the first time, Mexico has surpassed China in global trade. This is never thought before in this dynamic, and that is driving. So also, the Asian partners have understand that, and they're moving their factories and their labor in Mexico. So the nearshoring, what it's called, it's improving the relationship in Mexico with the workers. So that's one interesting factor. So that's the first thing. Remittances, where it has been big for the last 20 years in Mexico, they are still growing. It's now the biggest income from the US to Mexico. I think we are reaching this year 60 billion. Just in comparison, 5 years ago it was around 30 billion. So that's the amount of change. So that's the first thing on geopolitical changes. Now we have the financial situation in Mexico. If you see, when I say financial, is financial institution in Mexico. We have 42 banks in Mexico right now, 42 licenses. If you take six of those banks have roughly 80% of the market share. So they are really controlling or trying to control the banks. Most of them, only one of them is Mexican. The rest of them are usual suspects. Citibank, HSBC, Santander, BBVA, Scotiabank, and they have different risk appetite. So they are not willing to take big risks on the retail space. So that is driving a lot of innovation in the fintech arena. In the last 3-4 years, you have seen a really explosion in new fintech newcomers to the arena. I think the number is around 600 new companies on fintechs, and that's payment, lending, crowdfunding. So everyone trying to fit in and try to fill up the space where banks are not trying to or not willing to participate on that. The government regulation is still behind, trying to catch up with all these changes. And these changes are driven mostly by the merchants itself. They want to expand the merchants. And I think that another force that is driving this change is the payment dynamics. So I think it's expected. The American Market Intelligence has disclosed that in the next 4 years, the e-commerce payments are going to be bigger than in Latin America than the United States. And if we are trying to figure out why this is happening, I think we will point out to two things. First is the how much buying space we have. So in the US, you'll have you know that in the US they use the imperial system. They have 27 square feet per person to buy in. In Mexico, you have 1 square feet. So if I want to buy some, let's say, some specialized sporting equipment, golf clubs, for example, if I live in the US, I can go to my nearest store and get whatever I want and see the equipment and buy it. Here, I have to go to another city, perhaps, to see if they have. If you live in a medium-sized city, you'll have to go to Mexico City and then figure out where to go, and it's a hassle. So now you know that e-commerce works. You got delivery in your store, and it's a better ecosystem. And buyers and sellers are starting to understand that. So that's one part of the dynamics. Second is the adoption of payments. You see that we don't have PIX like or that QR code that in India or Mexico, but we have electronic transfer. And if you see how they are exploiting that, so the just to give you the context, cash is still king in Mexico, but not that dominant. 5 years ago, the cash penetration on payments was around 80%. Now it's 66%. In a very short time span. It's who is taking that space? Debit is one of those. Out of the 130 million Mexicans, you have close to 80 million debit cards. But you can have also like 28 million credit cards. So debit is taking that space, but electronic transfer, we call it here SPAY, it's really exploding. So that's what's going on, and the opportunities that were going on. I think that we're going to talk about later on that is that everyone is trying to take that space in the electronic commerce. So I think it's a very exciting place to be now in Mexico.
Thank you so much. I'm sure we can delve into all of that a lot further, but Jovi, just in the interest of time, would you like to go?
Sure, I'll be very, very, very quick. William made a funny comment at the beginning about multi-decade experience with the team on the call. And I don't know if that's a good or a bad thing in terms of, if you're looking to innovate and provide good solutions, do you want a team that has decades of experience, or do you want somebody that is, innovative, and doesn't have antiquated thinking? I don't know, just a question, for everyone else. But with respect to the state of cross-border payments, specifically for me, for Europe and in the UK, I think ultimately the European landscape is a testament to several years of regulatory planning and also some technology innovation. You can't speak of Europe without talking about SEPA, the Single Euro Payments Area. Now, before SEPA, cross-border payments were complex, they were costly, it was clunky, it was a pain in the backside ultimately. But with SEPA now, what you have seen somewhat is a lot of the inefficiencies and the frictions removed, making electronic payments, cross-border or domestic, far more seamless, and removing that friction away from consumers and also from merchants. SEPA ultimately is just the beginning, and if you look at the Payment Services Directive number 2, which is quite a mouthful, so we will say PSD2, that was and is huge, because essentially what it did is it mandated banks to open up their payment infrastructure and essentially their customer data to third-party providers, of course, with customer consent. And what did this do? It allowed fintechs to come in, and deliver innovations that, legacy banks ultimately couldn't deliver and were sorely lacking. So again, in Europe and also in the UK, fintechs just simply jumped in, entered the scene, and offered new payment solutions and much more efficient services. Cough, cough, on limits. But then also you've got open banking. Now, for me personally, open banking, it cannot be understated how much of an impact this has made, because ultimately it's emphasized consumer data rights, and it also allowed portability. So it created an environment where consumers can switch between service providers with ease, making the market far more competitive and also driving the need for continuous innovation. And I think you'll find that the common theme in this conversation and this roundtable is innovation, and if you can open up and reduce barriers, it's going to allow innovation to occur. So taking all of that together, these frameworks ultimately in Europe has harmonized the payment infrastructure across Europe. Trevor mentioned in Africa, 54 countries. Okay, in Europe, you've got your different countries, your different rules and regulations. But what this has allowed is a harmonization. It's removed bottlenecks, and ultimately, and again, in my opinion, it's fostered an environment to allow digital innovation to occur. If we talk very briefly about the UK, let's talk about the boogeyman, the bogey word, which is Brexit. So on one side in the UK, we now have the freedom to craft. And by the way, I did vote Remain, not exit. So I'm a Remainer. But in the UK, it's allowed and given us the freedom to create our own financial rules. But on the flip side, the challenge is to make sure that these rules do not create friction in cross-border payments with Europe, which is our largest trading partner. The UK has also adopted open banking, not as aggressively as I would like, but this, essentially is one of the earliest and most comprehensive ways in which we have reshaped the banking landscape. So if you look at companies such as Monzo, Revolut, Starlink, these are all fintechs with agility on their mind. They design their products with agility by design, and it has allowed cross-border payments to be a lot more frictionless and a lot more seamless for consumers. It's placed a lot of emphasis on real-time exchange rates, on low fees, on rapid transfers. And before these companies came in, banks could not deliver efficiently, these solutions. So ultimately, post-Brexit, this may cause the UK some challenges, but ultimately, I would say the challenges drives innovation. And the UK fintech scene is a hotbed for innovation. So in a nutshell, and in the interest of time, that is the current state, in my opinion, of cross-border payments in Europe and the UK.
Thank you. Very lively as always. Appreciate you. Yeah, absolutely. And I mean, thank you guys so much for sharing that insight about each of your regions. It's very imperative so everyone can sort of get an understanding of where your insights, knowledge, and experience is coming from. If we move forward slightly to our second part of our roundtable, it's about the idea of influence and evolution. So not necessarily specifically stuck to your regions, but more from what you guys have learned about what changes are happening to drive this wider and more open payment corridor structure that people are seeking at the moment. And even already at the point of discussion that we have had, what similarities and differences are you noticing from your own regions that are comparative with each other? And are these similarities and differences, are they more of a hindrance, or are they something that could facilitate better payment structures? Open floor.
I'll volunteer. I think from an African perspective, there are two things that are happening. Number one is the government's drive to move to a cashless environment. And that was accelerated during COVID. So it required a pandemic to get people to change their behavior, because that solves a lot of problems, gets money back into the system. So that's one of the big changes that have happened. So from a payments border from a cross payments point of view, from an e-commerce point of view, it's a lot easier to make an online payment when you've got money inside the system as opposed to outside. Incidentally, there were solutions in Nigeria to deal with cash in the system, whereby you go to a mobile money agent, you give cash, you get a voucher code in return, you go online and enter this voucher code into the system. That was the offline to online solution. So there were those types of innovation, but as the drive goes towards a cashless society, that's been quite a big thing that has happened. So that facilitates e-commerce. But the biggest change, sanctioned and unsanctioned, is crypto. Because crypto actually solves every single problem that Africa has. Now, if I talk about the fees for doing cross-border transactions, the ease of doing intra-Africa payments, and another side of it, which is quite interesting, is that Bitcoin is often a speculative product, and people hold it not to trade with, but hold it to make a capital gain. In Nigeria, Nigeria is one of the countries where it's in the top 10 for peer-to-peer crypto transactions, even though the government has tried to press and force down crypto. The reason is because, goes back to the currency problem, people just want to be able to store an asset value in a foreign currency. So if people had easy access into stable coins, and what they'll probably do is buy Bitcoin to, yes, get a gain, but could move that into a stable coin, then they're just sitting with a dollar value. And if they had done that, they're already 100% richer in Nigeria because they're now holding stable coins in dollars, for example. So those are the two key differences, or rather the two key changes that have happened. And the two sort of lead to each other because crypto is cashless, but as a functional tool, its capabilities are quite amazing. Now, the Nigerian government has sort of recognized that. They've launched the e-Naira. The e-Naira is, as its name suggests, it's a digital version of the currency, the Naira. But again, going back to what Joby said earlier on, people don't trust it because the difference is that e-Naira is a centralized digital currency, central bank digital currency, which means it's controlled by the central bank. Whereas if it's Bitcoin or Ethereum, it's a decentralized digital currency, right? So if it's decentralized, then nobody can actually come in and take it away from you. And the Nigerians think that they're going to look at their phone on their mobile wallet, and the next day they've got e-Naira taken out of the system by the government. Goes back to the issue of trust, because they like to keep cash under the pillow at night. If they've got e-Naira, they know that the government can track what is being done with the money. So they launched e-Naira in an attempt to get people to adopt it and to use it. And if people bought in, and if it was done in a perfect world, it's actually a beautiful tool to actually facilitate and smooth over cross-border, intra-country, extra-country, everything. It just works well. But as I say, there's a trust issue, there's an adoption issue. So the challenge that the government is having is to say, launch it, it's in circulation, you've got these wallets out there, people just aren't using it. And then again, it raises the second question. Well, now let's assume I buy into the idea of e-Naira. What can I use it for? Nigeria, you can't use it for anything. So what's the point of getting it if I can't use it? So now the government doesn't actually know how to deal with the problem and what to do in terms of driving user uptake. So for me, the biggest change is the introduction of crypto. On a lower level, if you talk about cross-border, and by cross-border, we think of the payment side, but there's also the delivery of the goods, the physical goods, because services are online. So you talk about the last mile. Now, they are beefing up that infrastructure in certain African countries. So logistics is being taken care of. So you can actually get the goods delivered to your house. You know, some countries don't have a good postal system. So if I think about the address of one of the places in Kenya, it will say road like 42 km, being 42 kilometers down the road, opposite the green building next to the sports field. That's your address, as opposed to saying 16 Central Drive or whatever. That's how they indicate where they actually are. So that last minute mile problem is being solved. If that gets solved, it then improves the chance of there being a quicker delivery, a more successful delivery. Going back to the trust question, if I buy something on Monday, instead of it coming next month, it can now come tomorrow. So maybe there's only a 24-hour time that you are a 24-hour time period that you would out your goods. So those, I think, are the key changes that are happening, certainly in the African context.
Thank you.
If you don't mind, I would like to go next. Let me.
Go ahead.
I will take part of what Trevor said. But let me start giving a context that will be much more interesting to have some examples. Every time someone is buying for something, service or goods, on the other side you have someone is selling something. In all of the world, shoppers wants to have a frictionless experience, and all of the payments, all of the shoppers, all of the checkouts are trying to provide something like this. But in the same way, all of the merchants, all of the sellers wants to receive the funds as quickly as possible to avoid risk, counter risk, to avoid penalties, to avoid blocks, to avoid taxation and everything. I would say that in the shopper side, we are much more well structured because we have lots of alternatives in terms of payments, digital wallets, real-time fund transfer, credit cards, vouchers, and other ones. So each one of the regions country will find something similar in a different way. But the problem is that behind the scenes, there is someone processing transaction and settling funds. But it's not one company or one competitor or one service provider. It's a lack or a quantity of provider. There is someone that you have a gateway, you have a collector, you have someone that's processing transactions, there's a bank account receiving the funds, there's a FX bank or FX rail that you need to move the funds abroad. And the other side, they happen the same way that you are receiving your funds in your account. I would say that payments and open banking or banking as a service or banking, digital banking, works together. And if you have a complete offer in both sides, I would say that we'll be much more prepared in terms of providing a better service in the future. But taking what Trevor said, there are some governments around the world that they are testing digital currency. Like we were doing here, the digital real, the DREX, the name is DREX. Since last year, we are performing, no, since this year, we are performing some live tests with 11 participants, banks and digital wallets. And you can have your digital real, your DREX, based in blockchain, hosted in anywhere. It can be a traditional bank account, it can be a digital wallet, it can be a fintech, it can be any other one. By the moment that you see different parts of the world and different countries testing or trying to promote digital currency and avoid the traditional cash way to pay, it will be a door open for turn all of these currencies convertible in a real-time way. I mean, it will not be necessary to use like FX rail, it will not be necessary to use a traditional way to move funds from one country to the other country. Probably in the future, we will see rails that you can convert reais in USD, in euros, in yens, and other ones in a much more easy and fast way. This is my understanding about innovation. This is my understanding about what we will see in the future. We are just in the beginning in terms of converting or creating the digital currencies, but the government, they are sponsoring these initiatives, what is good. Of course, each one of the country or the region will move forward in different levels or different steps or ways. But this is the future that you'll see regions, country be much more integrated. And from the moment that can convert one currency into the other one in the digital way, the merchants, they will be much more well prepared in terms of, okay, I can provide a service or a good, and I receive my money, I receive my funds or payments, will settle the funds in a very real-time way. I mean, less than 2 days, less than 3 days. It can be in hours, it can be in minutes. So it will be something very interesting in the future. So this is my understanding. And Jovi, feel free to move on.
Thank you, Lucio. I was going to ask before I jump into it, Trevor, that for me is amazing that Nigeria is in the top 10 of crypto users. Is that correct?
Yes, that's correct. And that is peer-to-peer usage. And let me just tell you a little bit more about that. Peer-to-peer. So what happens is the government, you can't ban crypto. So what the government did was the government banned the on and off ramping of the fiat currency into crypto. So what happens is you get these exchanges that go there. And what they'll do is like, I will interact with you through like a chat, and I'll say, I've got a Bitcoin to sell. You want to buy the Bitcoin. So this chat facilitates that I place my Bitcoin into an escrow. We then exchange details in like a WhatsApp chat or a side chat. You give me your bank account details. I just do an EFT behind the scenes, a bank transfer behind the scenes, not through this exchange platform. I then go back to my exchange platform and I mark that I've received your money. You mark that you've made the payment of the money for the Bitcoin, and both sides align. The exchange takes a small fee in Bitcoin and settles the Bitcoin to you. So that was how the Nigerians got around it. Then the central bank went one step further and said to the banks, if you suspect that a payment has been made for crypto, you can go and investigate. So suddenly, if you're making a payment for $20,000 for a month's rent in Nigeria, which doesn't happen, that is suspicious. So that's how they actually get around the problem. And it's primarily to protect wealth, to send money out the country to do something with it, but to not hold and sit with Naira. So yes.
Okay, amazing. Really? I didn't know that, but again, I'm so far removed from the payments landscape in Nigeria. I know, Sim, you mentioned, perhaps we can discuss other regions, but I think I'd be, foolhardy to try to talk about, everyone's respective regions, because again, Nigeria, I have no clue. But with respect to Europe and the UK, I think I've lost track of the amount of times I've either been told, been emailed, been pitched at a network party, at a conference, at an event about the need for digital transformation. That seems to be the buzzword. What are you doing to prepare for your digital transformation? What's your digital transformation strategy? And Europe, for me, has been on this sort of relentless quest, to transform its payment sector through digital transformation. And one of the initiatives in Europe is the European Payments Initiative, very well titled. And essentially what the EPI does is it's backed by several large banks and credit institutions. And what they're looking to do, is to create a unified pan-European payment solution, essentially. And this is going to mean that consumers, merchants, again, individuals across Europe can simply use a single standardized payment solution for all transaction needs, irrespective of their country. Belgium, Germany, Spain, it doesn't matter. And the logic behind this, very, very simply is multifold. Number one, it, again, as Trevor mentioned, Africa being a very, large continent with different countries, the fragmented nature of the European payments market, so STEPA came in and it brought harmonization for bank transfers, but for card payments, for electronic wallets, this is still fragmented and still very much diverse. And what the EPI is trying to do is to create essentially a singular corridor for all of these transactions. Secondly, if you look at Europe's dependency on non-European global payment systems, this, again, depending on how you look at it, can present a risk both in terms of sovereignty and also, importantly, transaction costs. In Europe, if you can deploy a homegrown solution, this ultimately should mitigate the risks that Europe faces. And it's going to ensure that its payment infrastructure is robust, is secure, and again, more importantly for merchants, for consumers, is cost effective. The UK, and again, I keep talking about the UK with respect to Brexit. Because of Brexit, the UK now has its own unique challenges, but it, again, as I mentioned earlier, it also houses one of the world's most vibrant fintech ecosystems. So if you take Wise, or TransferWise, obviously now known as Wise, they ultimately revolutionize cross-border payments, by offering, again, real-time exchange rates, transparent fee structures, and also faster transfer times. And this directly addressed all the pain points across the value chain of hidden fees and delayed transfers that many traditional banks essentially couldn't deal with. And Wise is just one of the many success stories in UK, with examples of multiple startups and established players all introducing disruptive solutions to the markets. And if you ask the question, what is the driving force, behind this fintech revolution? Ultimately, it boils down to favorable regulations, good regulations that have been implemented by the government, a thriving tech scene, and also, let's put power in the hands of the people, a demand for better financial solutions. And if you take all of this holistically, it's shaping an environment where you're going to have more open payment systems, more open payment corridors, both within the UK and also internationally. And this is now becoming the norm as opposed to the exception. If you, again, let's say take Europe and the UK as landscapes, it's evidence that the catalyst for this comes from fintech-led innovation, okay? And that is consistent across both the UK and Europe. And the overarching drive is all about harmonization and also sovereignty. It's looking for consumers, for businesses, for fintechs, for startups that is efficient, is transparent, and offers consumers, far better choices in the payments domain. And that essentially is the influence of the digital transformation strategy in the UK and in Europe.
Thank you. So with UK, Jovie, if Brexit hadn't have happened, how fundamentally different do you think the landscape would be at this point?
I think it would be fundamentally better for the UK. Again, in my opinion, and as somebody who voted Remain, I try to look at things that, okay, is this going to be an impediment, or is it going to allow ease of trade? Is it going to allow ease of payments cross-border? And anything that to me puts a barrier in that, especially when you have such fragmented countries, is going to cause disruption in the seamless nature of transactions. So again, just let's take the UK and Brexit. If you look at all the hoops and hurdles that the UK and Northern Ireland has to overcome, the hard border, then you've got the border across the sea, the trade, you've got Northern Ireland that's part of the UK, but has one foot in Europe. All of this, mess, all of this hurdles that they have to jump, it stops the efficiency of cross-border payments. If the UK had in fact voted to remain in Europe, I think the UK could have added value, and Europe could have added value. And again, as Europe is the largest trading partner for the UK, why implement something that's going to put barriers, to facilitate that cross-border payments? So that's my opinion.
No, well said. Thank you. I just wanted to gather your insight on that.
But again, let me just add a caveat. This is coming from somebody who voted Remain, so it's not entirely objective.
That's absolutely fine. Thank you.
Okay.
William, Ignacio, would you like to go, either of you?
Yeah, so I think after hearing Lucio, Trevor, and Jovie about cross-border payments, there are three things that's always on my mind. One is the consumer choice of the source of fund. What I, as a UK, Hong Kong, Singapore, Taiwan consumer, how I pay on a daily basis if I want to buy from cross-border. I think for the past 2 years, 3 years of COVID, everybody is trying to buy online. So I order from Canada, I order from everywhere in the world. But as Jovie first asked about the trust, I will trust my choice of payment. So I rather use the payment methods or the source of fundings that I am used to, rather than something that the merchants guess. That's the number one. The second thing is from the merchant perspective, regarding of the forex variations or the fluctuations. As Trevor mentions, I'm also the first time I heard this, Africa is using a lot of crypto, right? So crypto, one thing is for stable coins, I want to sell something at $1 and I got $1 back. But if I am an APAC merchant, I'm trying to sell someone in UK, I try to use the British pound. But again, so Jovie, we look at Brexit in 2016, so it actually drops 6% overnight. So, and then as a merchant, I'm losing money. So those are the things how you try to balance what is the consumer choice and what's the risk of the merchant. So I think what Trevor mentions about stable coins, cryptocurrencies, is trying to find a balance line between the two. And allow me to say, as I mentioned, APAC is complicated. So we have Hong Kong dollars, Taiwan, new Taiwan dollars, renminbi, all the things, right? So if I am a consumer or a merchant from this part of the regions, how I do business and how I stay competitive. Like those are the things that what we can do to help them as a payment processors. So we cannot just say that, hey, look, I'm going to take money from your forex. I'm going to not care about whether you earn money. Like how to do the balance, especially like if we're looking at when I talk about APMs. So we are all very experienced with APMs. So if you're looking at the Visa, Master, the traditional or the legacy card networks, like it's T+1, T+2, but the APM can be T+7, T+14. And what happens during the 14 days? So what we can do to help to protect the consumers and also at the same time protect the merchants. I think like that's something that like we as a group can look forward to that. Like trying to like balance out the forex risk for the merchant. If we can do that, I don't have an answer right now. Like I heard a lot the pain points of merchants saying, hey, I'm trying to sell into the new market, but it's so fluctuations. I'm just afraid that like if you settle me in 14 days, I'll be losing money. Those are the things that that keeps me awake and one of the major problems for us to solve globally. Maybe as Trevor mentions, like cryptos or stable coins can be one thing, but we also understand now in the crypto world, a lot of things are changing. The government is looking at a lot of like CBDC, the central bank digital currency. So I'm trying to strike the balance between all those things.
Yeah,
I raised my hand very. Yeah, sorry. Again, Sim, if you have a natural order, please tell me to wait.
Go ahead. You don't need to raise your hand. Go ahead.
Again, obviously, Trevor brought this up, in terms of the central bank digital currencies, and obviously followed by William. And I still struggle to understand, how this is going to increase adoption. Because again, the whole point of crypto assets, cryptocurrencies, is the fact, as Trevor mentioned, the decentralized nature of it. Now, again, in Europe and the ECB are looking at, and as are various other central banks, how to deploy central bank digital currencies. But by its very definition, that is a centralized system. So as a consumer who is heavily into crypto, and I love Bitcoin for the fact that it's decentralized, where's the use case, for me to switch then to a digital Naira or a digital Euro? Yes, they will tout the fact that these central bank digital currencies will make cross-border transactions more seamless, make them less costly. But is that the primary reason why I, as a consumer, would want to use it? Surely it's for the fact that it's decentralized. This is just something I'm trying to understand and wrap my head around.
Let me respond to that in the night. Sorry. Let me just thanks. Just quickly in the Nigerian context, because it's a valid question, and here's the answer. I think you're thinking about it slightly differently, because you may be thinking about it, I'm going to take this e-Naira and buy a pair of Nikes and a car and pay for dinner at a restaurant. It's not that. How they need to get that going is to say, think about government school fees. You go pay government school fees every month. So you say to all the parents, you pay your government school fees using e-Naira, 10% discount. Suddenly, every parent in the country is going to be using or demanding e-Naira to get it in and pay out. That's the start of the use case in the Nigerian context. Might be different for other regions and countries where a small online store can start to accept e-Naira or whatever the other digital currency is. But in the Nigerian context, because there is no local e-commerce store and there's no trust in the local e-commerce store and there's no trust in the e-Naira, it's just not a non-starter. But if someone says, I'm forced to pay $1 million Naira per month school fees, well, now I can pay $900,000 Naira a month school fees, I'm going to do it because, well, it's the government backed, it's government schools, all government. Well, I just have to pay the government, I'm saving money. That's how it can start, and that's one example. Local bus fare, for example, if you can go on and the bus isn't able to accept e-Naira and you can tap to make a bus payment, as opposed to someone standing at the queue, they're getting change out of their pocket to try to get the right change in Naira. It's a queue behind you, the bus is causing a traffic jam. These small things, that's the realistic use case to drive and to get the adoption up. William, over to you.
Hey, Trevor, exactly, that's exactly what I am seeing. So I get it from Jovi saying that, hey, if I want to use crypto, it's decentralized. So it's not trackable, so I get the freedom. But if you look at what ECNY, the electronic China yuan renminbi. So if you're looking into the Olympic Games back 2 years ago, right? So Visa has been the sole sponsor for the Olympic Games for 25 years, for a quarter of a century. But the last Olympic Games was being held in China or in Beijing. So the government is driving, hey, look, we will accept Visa and ECNY. So if you look into that, so ECNY was the adoptions at that time was actually, again, in China, it was being said is higher than Visa. So one thing I always said, in a few of the topics or the panel discussions, right? So although cryptos, CBDC, they are under the same blockchain technologies, but they are going two different ways. So some people will not like to be traced, the decentralized, but the government wants it to be traced. So those are the two differences, right? So exactly as Trevor mentions, the use case will be how the government is looking at it. I know, as I mentioned, APEC is 12, 13, 40 countries, but being China is one of the biggest e-commerce online or digital wallets community in the world. If the government is pushing ECNY instead of WeChat Ali, they are able to do it because of the regulations, because of the governance, and I think it's almost something that is not driven by the consumer. I'm not talking about anything about politics, right? But if the government decided, hey, look, I'm going to stop Ali, I'm going to stop WeChat in the next 2 months, I will say China is almost the only place in the world they can do it. And no one can escape and go to the CBDC, and then the government will have the full control of the money flow. So I think that's one of the interesting points. It's not about use case, right? So if I want to be untraced, of course I will go to I don't want to say the legacy, the current crypto route, whether it's Bitcoin, Ethereum, Solar, right? But if I don't have a choice, what if you don't have a choice? I know in the world, a lot of places the consumer get a choice. But let's say one of the biggest populations, China, they can actually do it overnight and push it forward.
And sorry, just one further point. Sorry, Jovi, just one further point to add. Now, in India, you've got the e-rupee. Now, the e-rupee, you don't need a use case because the way the Indians are inclined and the way the government is driving a digital-first economy for India, the adoption is going to be there regardless. And not only that, there's already talk that the surrounding countries, Mongolia, Nepal, those other countries will actually adopt the e-rupee as a trading currency. So that's another situation where you don't need people to buy in and take a trust in the system. It's already there. You want to do a cross-border trade or a local trade, someone is going to start accepting e-rupee. So it's also very different to the Nigerian context. I just wanted to add that in just for balance.
Yeah, I was going to make that, not that particular point, but I was going to touch upon the use cases that you, Trevor, and William gave. To me, did not demonstrate the use case from a cross-border perspective, more domestic. So I don't know, again, unless I'm not seeing it, how maybe in time it would translate into more efficiencies from a cross-border perspective. But central bank digital currencies, to me, currently, it seems to be more inward-looking as opposed to facilitate cross-border transactions. Is my assumption incorrect?
It's difficult to answer a question like this, but I would follow what William said. Governments want to trace. This is reality. So, and you said they are looking after the domestic operation, the domestic financing. They are not looking after the cross-border. The private companies that are providing this and creating this type of innovation. What we see is that even the government are testing digital currencies based in blockchains or convertible fiat to stable coins, wherever it is. We still need private companies providing this cross-border service. because the government, they will not create something to support this. But we are doing, and I mean, Unlimited is one of the players, and we are creating this model. And the governments, they have their eyes open, and they are following what we are doing. There are some companies that are creating or innovating, and this is something that probably they will include in the future in the regulation or in the innovation that the central banks are creating in different parts of the world. But I would say, depending of the region, crypto is very unstable. Like here in Brazil, the central banks will create a regulation to accommodate the crypto. So they want to promote and offer the crypto. But crypto is not a reality. It's something that you can use crypto to buy in a checkout. It's something that you use for investment. Okay, I buy crypto because I can make some money because of the inflation or because of the crypto will increase the value, and I can sell my crypto in a certain moment in the future. But I don't see that it's something in a reality that can use right now, but it's a way. The Trevor brought some examples that, okay, it works for that. The challenge is how we can replicate this mode in the other regions. So again, crypto can or cannot be the future, but what we saw in the past, lots of brokers entering bankrupt, lots of companies being subject of by central banking screaming. I would say that there are lots of to create in terms of be more accommodated with crypto, but I believe that the digital currency or the innovation from the central banks creating or trying to avoid the cash usage and bring the crypto will create a more easy environment for business and move funds from one side to the other side. But again, tracing is a mandate for all of the central banks.
Let me jump in on this because we speak a lot of crypto, and I think in this part of the world it's different, the adoption, since here at least we have a very stable currency and some stable economic conditions. We all, I think that's everything that is common in the rest of the world. We don't want oversight. But what has led some revolution here, this is not a government-led revolution, and it won't be. It's a consumer-led revolution. And what trying to tie all the pieces together, what we discuss is the ease of use, even if it's crypto or if it's credit or debit or transaction. And that's what it's being, what I've seen that has really changed in the last 20 years. I've heard here, let's make the war against cash. And there's been a lot of efforts trying to move cash to any other method. And once we had technology that enabled digital account opening and not going to a bank to open an account, having an account in your phone, and be able to transfer from my phone to the phone that's in the merchant, that's what really kicked off the merchant. And once that I have options, you can pay me with your credit, your debit, your wallet, transfer, or go and deposit cash in the supermarket, and then you'll have the account. That's what really is making this transformation. So you made that the ease of use and the innovation for the consumer. That's what really is driving the innovation in at least in this country. If so, just for sake of to show, really to put some ideas on here, this is what has happened with transactions, electronic transaction in Mexico. Just once we had over here really the explosion of smartphones in the country, and digital account openings happened in 2016. Look, just the amount of transactions going up, really hockey stick. And this is not debit or credit. This is here you have here the amount of credit and debit accounts. It's been constant, but once you had the digital account opening over here in Mexico, you really exploded on at least on the Mexican landscape. So having everything that is immediate, frictionless. If I send you a payment and immediately you receive it, and I know that there's not going to be a surcharge or some fraud in it, then everyone is comfortable to using it. So that's what I've seen in the last 5 years happening here and going forward, because there's still not dominance, not a dominant player in either in banking or under alternative payments. So we are going through that direction. So crypto, I don't know if it's going to be immediately, eventually, when we see still international B2B is still ineffective. We're still using SWIFT here, and it's very ineffective to the ways to perform business. So I think that will be the next step on the transformation in Mexico.
No, just a little bit to the context, like what Jovi mentioned about B2B. So whether it's in the lens of the consumer or the merchants, like in the cross-border B2B space or cross-border e-commerce space, basically there are three major pain points that I have been seeing. One is the trust. Jovi mentioned, like I buy from someone that I never know. It's not like a store. I can go to Singapore, I can go to Hong Kong, I can go to London and visit, right? The second thing is about the logistic. How long I'm going to receive that goods. And the third thing is actually the fluctuation of currencies. If you're looking at Asia Pacific, I always said Asia Pacific has been the center of trading for many countries, right? So when we say trading, like what do we mean by trading? So I see arbitrage because of forex, because of common situations. Like I can get let me put it this way. I was talking to a friend. I can get a Chanel handbag for my wife 20% cheaper if I'm in France. So I go for it rather than I buy in Hong Kong, right? But what are the risks, right? So imagine I ordered online, like it seems to be at the point when I purchase it, I am having 20% discount. But what if euro, Hong Kong dollars fluctuate, right? So one thing that we deal with cross-border commerce is like when we have a CBDC or crypto or stable, like let me put away crypto, let me put away stable coins or CBDC, and then it takes one of the pain points away, which is the foreign currency fluctuations. If we look at USDT, no matter what I did, I received one USDT, which is $1, and I am being protected. Like if I am a consumer, I pay one USDT, then I pay $1 at the time of the purchase. So those are the I would say a little bit of arbitrage on the cross border. So there comes to a time I do believe, as I recall, when I'm doing cross border business like with one of my old companies, PayPal. Most of my merchants are trying to sell overseas, whether it's like cosmetics, whether it's like iPhones, right? But then at some point of time, the US currency become very strong, meaning that I buy an iPhone from Hong Kong, from China, from Singapore, it's almost the same price I buy it locally, whether it's in US or Australia. And at the same time, I do see a big drop in the business of the cross-border merchants. Reason why? Because as a consumer, I risk for 2 weeks, 3 weeks, and I buy cross-border because I want to save $200. But if I'm only saving $20 and I can buy down the streets, then I get it immediately. So those are the things that I'm seeing that, like as Jovi voiced out the questions, right? So for a cross-border, whether it's CBDC, whether it's stablecoin, I'm thinking about crypto away. And Lucio mentioned crypto can be fluctuation even higher than the foreign currency. So why CBDC or stablecoins works well in a cross-border environment is then we take away, as I mentioned, one of the pain points where there's a consumer or the merchants away.
Great. Thank you guys so much. That was very insightful. I think just in the interest of time, and so we get to cover everything, I'm sadly going to have to move on slightly to our third and final section of our time together today, which is about readiness to thrive, which is something that you guys have already started now discussing. And it's sort of looking at each region and those technological advancements in payments that we're seeing and how that is going to shape the landscape in coming months and years that would be beneficial for merchants, for example, to be paying attention to and being aware of. How is that going to impact them, and what are those things specifically?
Okay, let me first again start with nobody minds. So it's already got the answer to hand. So I think I often get asked this question, Africa is a hotbed. Lots of people believe that the next Google or Amazon or Facebook meet is going to actually come from Africa, and it can well happen. So you're talking about technological advancements, but in the payment space, Africa has generally been a pioneer in that regard because of the defragmented banking. There wasn't banking as you know it. They didn't have banking branches. Lots of people didn't have access to bank accounts. So they went from nothing to the introduction of a mobile phone, and then that drove the adoption and uptake of banking. So mobile money, mobile wallets, and mobile payments are very good and they work well. So I don't foresee there being a change away from that, because let's be careful to put down the fact that there's an expectation that we're evolving, things change, like groundbreaking things can't happen all the time in the payment space. A good piece of tech comes along, and the ecosystem is built around that and expands. So in the mobile payment space, you take Kenya, they're famous for M-Pesa. I think 75% of all payments in the country are done through mobile money. That will be there for a period of time. And so to answer your question, how will the landscape look? It will only be increased adoption. It won't change that much. And then the other question, how do brands ensure readiness for cross-border payments? That's quite specific to being able to accept and know and understand and deal with mobile money. So in our context, a lot of our merchants come to us and say, Trevor, we want Africa. It's question number one, give me a country. Kenya, wonderful. What do you want? Card payment. At which point I say, but you realize that if you want to start with card payment, you're probably missing 90% of the market. Card payment is actually irrelevant. You need to start with mobile money, and card payment is in addition to. A lot of the big payment companies who aren't present in Africa specifically, or through partnerships, or through their card scheme association, say, we can process in 200 countries for you. You say, wonderful, can I have Kenya? Sure, we've got Kenya. We can do debit and credit card processing, but they don't understand that actually they're missing a large part of the market. So from a technological point of view, I think the technological innovation has been there. It might be a shift towards a digital currency, but then that's too far down the road, because realistically it won't be there. Businesses have grown up, and when you go to these countries and see mobile money in operation on the ground and how it's meshed, how the ecosystem works, how it's a daily part of people's lives, it's become part of the fabric of how they do business. No amount of technology in the short and probably medium term will change that, maybe in the long term. So that's my answer for Africa. Other countries are actually adopting or moving towards mobile money. Nigeria is seeing a growth in the usage of mobile money, again brought on by COVID. In South Africa, for example, mobile money has tried and failed 3 times. Why? Because everybody has access to a bank account, and we've got a very sophisticated banking infrastructure in South Africa. Not so for the rest of the continent, which is why mobile money took place. So remember, mobile money solves a problem that existed in Kenya that doesn't exist in South Africa. So South Africa will remain the same. Other countries like Nigeria are tending towards mobile money, and countries like Kenya, Tanzania, their penetration is very high at the moment. So I don't see too much innovation coming into that space. The innovation will be around the ecosystem supporting that. Credit, buy now, pay later, but using mobile money as the enabler.
Thank you. Does anyone have any thoughts?
Yeah, echoing to what Trevor mentions, right? So you mentioned mobile money. So like less step a little bit away from payment. I know we are all payment guys, right? But so nowadays we are looking at the new generations. Is either mobile first or even mobile only. So if you look at the whole commerce, not saying e-commerce, environment in China, so no one use cash anyway. So I remember a time like being in Hong Kong. If I go to China, I even have the Chinese renminbi. I can do nothing because no one wants to accept it. So everybody is using mobile phone. So I think that exactly as Trevor mentions, right? The technology is already here. The adoptions, before COVID, after COVID, now people are traveling around. So a month or 2 months ago, like we are all in Switzerland, are doing the wonderful trip, right? So I don't even try to exchange any money. The reason for this is like I know I have a credit card, I know I have a mobile phone, so I don't want to get $1 or $2 left or $20 left. So those are things I think like this is exactly how the mindset of the existing or the next generations is moving on. The technology has always been here. If you're looking at a mobile wallet, like in China, it's been here for almost a decade. But the adoptions, like Trevor mentioned, like you look at India as an example, right? In 2017, 2018, no one will expect the Paytm or the mobile wallet will grow so fast. But now it's a fact. So I think like it exists. The technology has always been there. The adoptions, the time of adoptions, the influence of the government, the mindset of the people or the generation is more important for the next innovations or the next step.
Well, let me complement it with some thoughts. I would say that if you have an ecosystem, imagine like we had Mercado Libre, one of the key marketplaces in Latin America, the Argentinian one. When you see that 20 years ago and compare with today, they create a digital wallet with Mercado Pago. Now they are a card acquirer. Now they are a banking. Now they are providing anticipation. They are providing loans, and they are providing lots of finance solutions for our ecosystems. In the same way, Brazil is a big country, and we all know we are an agro country, and we can see companies and our ecosystem creating their digital banking. In the north of Brazil, the Amazon state, in the Ceará state, or in the middle of Brazil, in the south of Brazil. So lots of digital banking being created for agro. You can see insurance companies creating digital banking. From the moment that you have the digital bank in your mobile, as Inácio said, it's much more easy to provide all of the financing service. In the same way, transportation, nobody wants to buy a ticket. We are using TAP, whatever it is, can be a mobile or a transportation card or any other one. So we can see that if you have an ecosystem, it's mandatory that you create a finance solutions and monetize with them. But in Latin America, the key point is to provide loans or credits, whatever it is, different type of loans or different type of credits. If you're only competing per digital account or only card, you don't add value. So you need to think how we can compete locally. And I believe that each one of the regions has its own requirements. But here, credit is part of the game. And in the same way, the central bank here is promoting a way to how we can decrease cost for shoppers and for sellers. That's why they create the PIX, the real-time fund transfer account to account. And I believe that in the future, this will be the key payment type in whole Brazil. Because from the moment they create the PIX, the debit card transaction dropped down. And they are replacing the debit card transaction. Everybody use PIX. In the same way, from the moment that they launch the recurring payment via PIX, that's expected for beginning of next year, that's under testing, they will replace the credit card because now all of the people can access a credit card, for example. Sometimes you have a debit card because it's connected to your bank account. In the same way, in the future, if you create the PIX credit or PIX installments, it can cause trouble to the card schemes. So we will see that if you have ecosystems, it's mandatory that you create your own financing services in different verticals, in different areas, different segments, in different parts of the country. So this is my understanding.
I don't have much to add to my esteemed panelists. Ultimately, I do think, and I made some notes, while Lucy was speaking, that from my perspective and in my opinion, if it adds friction, it adds cost. And different regions will have different rules and different regulations, and that will add cost. So businesses, and I know we've spoken a lot today about technology and technological innovation. We should also include and add to that, the regulatory landscape, and businesses have to be adaptable to the different rules and regulations of each particular region. One of the primary reasons why, I joined Unlimit back in September 2021 was the CEO's grand plan and ambition to have a unified payments company where you could be domiciled anywhere and transact seamlessly across border. When launching BaaS, the end game for the banking as a service product is we want to be able to offer one set of APIs to a client that can open accounts, can issue cards wherever we're present, so in 17 locations. And to do that is extremely difficult. We are inundated daily with calls from prospective merchants, businesses, partners who are saying, can we launch a program in Europe, in LATAM, in the Middle East? Not knowing that to navigate each of those independent and different rules and regulations and jurisdictions is incredibly difficult. So as I mentioned, if it adds friction, it adds costs. Trying to launch something and then ultimately move money cross border without appreciating the different nuances of the different regions is going to add costs. So businesses have to be mindful from a tech perspective, but equally as important from a regulatory perspective. And that's why for me it's important to partner with companies, with businesses that has that local knowledge, that has that local footprint in those different regions that can help you as a business navigate those different rules and regulations. That's what I would add, but I think it's been pretty much covered by the rest of the panelists.
Yeah, at least in this part, Jovi, taking your point, there's such a pressure from the market to the government to have a better regulation. You see cases here, 2 or 3 companies or banks that are offering BaaS or sort of BaaS, quasi-BaaS, that have been enormously successful. But when the regulator comes here and try to understand, they put some brakes on it and they forced to shut down. But I think the necessity is here, and the pressure that the government is having is that it's going to change in the short term. There hasn't been a big change in regulation. There was a fintech law that was started 5 years ago, and it's remained the same. And I think that there are 80 licenses waiting for approval. Eventually, in the next year and a half, you'll see more openness to have. I think the first thing is going to be BaaS, because people want to participate in the payment ecosystem, whatever the solution is, but I don't want to be a bank. I don't want to give loans. I don't want to be credit. I just want to facilitate things. I want to get to the consumer. That's one of the things that is going to force the change on that. We have the technology, we have the adoption, frictionless payments, but I want to be a bank or have all the infrastructure behind that. So I think that's one of the things that we'll see happening in the near term in Mexico, at least.
Perfect. Well, gentlemen, thank you so much for your time today, your inputs, your knowledge, your expertise. It's been very enlightening and there's so much to take away from it. I thank you all for your time and getting up super early or staying up late. It's been amazing, and I wish you all an amazing day.